welcome, Mr. Samson. I hope you are able to get one or two things I'm trying to explain here. Okay, I don't know if you are following me. If you are following me, just let me know in the comment section that you are following me. Let me know in the comment section that you are following. All right. Okay. Okay. So now let's see. The next thing we have here is support and resistance. Okay, this is a very crucial aspect of trading. Now, at every given point in time, uh, the market is expected to change. Okay, so let me just explain. I will explain the support and resistance, and then we'll wrap it. Let me see what's the next thing after support and resistance. Um, Currency pairs and major currency pairs, minor exotic. Okay, so I'll take on support and resistance, and then we call it a day. All right. So support and resistance, one of the most popular and widely used technical analysis technique in the stock, forex, and even the crypto market is support and resistance. Okay, even synthetics. Okay, synthetic makes use of support and resistance. Let me see if I can open up binary the trading view. Okay, let me see if I can open up um the synthetic.
That's support and resistance.
Okay. Let me see if I can open up the synthetic charts. Let's forge ahead while it loads. Okay.
The even
Uh,
candlestick
the support and resistance is a very key aspect of trading.
trade.
Okay. Now, support and resistance is one thing. Demand and supply is another thing. Okay. Support and resistance, one. Demand, supply, another thing. Okay, in this particular section, I'll be giving you an assignment. Okay, after I've explained it to you, I'll be giving you an assignment so that once you are done, you send it on our group on Telegram, and then you tag me. Okay, once you post it on the group on Telegram, do well to tag me or draw my attention. Okay, so um, now support and resistance are not they are not just ordinary technical analysis tools. Okay, they are more than technical for me. Yeah, they are more than technical analysis tools. I'll be explaining and I'll be showing you why. Okay, now let's read up what we have here. Okay, as price move up and down, price action traders are constantly analyzing the price movement. Okay, technical analysis and price action traders believe that the price moves in line with fundamentals. Support levels are demand levels where price can be seen on the chart to have found support. Okay, on the flip side, resistance levels are seen as levels of support of supply areas where the price have found resistance to move higher. Now, let me relate this thing to the day-to-day life. Okay, to our daily activities, to whatever we do daily. Okay, now for instance, now uh you actually want to climb, or let's say you are in a two-story building or in a four-story building, for instance, maybe in a shopping mall, ShopRite, whatever shopping mall it be. Okay, and now you want to go to the next floor. All right, there's a ceiling above you. You can't just break through easily. Okay, you can't just break through easily. Is it that you follow the escalator, the steps, the lift, or whatsoever, okay, before you can actually get to the next level. Okay, that is the same thing with support and resistance. Now, this is let me see. Okay, this is a level here. This is another 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 level. Okay, the market wants to come down here. Okay, but it will not easily with one candle drop. I don't know if you understand me. The market will not easily with one candle drop. Okay, the market will get to a point where previously has held. Okay, stop, retrace a bit, look for willing sellers, go down again. Okay, the market moves in wave. Okay, now you can see if the market is in a downtrend, you can say the market is creating an impulse correction, impulse correction, impulse correction, impulse correction. Okay, this is for a downtrend, and the reverse is for an uptrend. If the market is actually creating an uptrend, you see impulse correction, impulse correction, maybe even be double bottom, impulse correction, impulse correction, impulse retesting this previous low, correction, impulse here retesting this, correction, impulse, and decide to test this one, then push further up. Okay, that's the way the market move. Right, the market moves in very strange ways, but as price action trader we should be able to analyze the market and get buying or selling areas, okay, where we can make profits from. Okay, so now these areas where the market pause for a little while before continuing its impulse move or correction move. Here for instance, here this area now, the market is actually aiming for this high, but stopped here one, stop here two, stop here three, four, and up to the fifth one. Okay, so now these areas where the market stopped are simply called resistance areas. Now let's say this is one story, two story, three story, four-story building. Okay, the market wants to go here. Okay, the market will first of all go to floor one. Okay, now come back down. Okay, go to floor two. Okay, come back down a bit, go to floor three, come back down a bit, go to floor four. Okay, the market may not easily just hit from floor one to floor four. Okay, it's not so on the market. Okay, most times during volatile events it could be achieved, but if you're actually trading expecting the market to just fly up once, you lose money. Okay, that's just it. So you need to understand the condition of the market and flow with the condition of the market, flow with the trend. The trend is your friend. I know most of you must have been hearing about it. The trend is your friend, the trend is your friend, the trend is your friend. Okay, it's from the trend you make money. You don't make money easily on a ranging market. Okay, you don't make money easily on a ranging market. So whenever the market is trending, you could easily make profit. Okay, so now forging on, support and resistance level are levels where the market take a breath. Okay, you can see the market will just go up and come back down. Now the point at which where the market decide to retrace a bit, that could be a resistance. Okay, it could also be a supply or demand level, depends. Okay, so now I won't be talking about supply and demand now. What I actually want to focus on is the support and resistance. Okay, because most times most people mistakenly interchange them. Okay, but let me just clarify this once and for all. Alright, so now what I like doing, let me use a fresh chart. Let me use a very fresh chart. Let me see a chart I've not done anything, because I have areas here that are very special to me marked up. Okay, so let me see a chart I've not done any single thing on. Which market am I not familiar with? NZD card. I've not. Have I traded NZD card? NZD card. Have I traded NZD card previously? Okay. Alright, I have traded NZD card, but still, I can easily mark it up because I don't really do much on this pair. Okay, so now I'm using the daily time frame. What I do on the daily time frame is I'm actually interested in major turning points. Okay, please, what's the difference between support and resistance and demand and supply? Very, very good question. Support, demand, and supply are those areas that can only be used just once. Okay, if a level is being tested more than once, it becomes a support and resistance level. Right, I'll be showing you on the chart here. And what you need to be looking out for whenever you hear about supply and demand, aggressive buying and aggressive selling. Whenever the market moves out from a level aggressively, you just see with like somewhere around here now, the market pushed out from this place like aggressively, just pushed out. Okay, here could be a previous uh, demand level, sorry, that made this market push up like this. Okay, here now becomes a fresh demand level. All right, so I'll be showing you how to get the zone. It's not just a line, it's a zone. Okay, so if you are trading supply and demand, please, please, and please don't bear in mind that it is a line. It's not a line, it's a zone. Okay, so it could be something like this. That's why you see most people they mark up supply and demand levels like this. Okay, so whenever the market comes here, then you could see them have analysis like this. Then you see their stop loss will just be slightly below this low, and then you take profit here. Right, why? Because they are expecting what this level to hold price to push it up. So that's just it. So I'll be showing you supply and demand in a later video where I'll be explaining every single thing about supply and demand. Okay, the microeconomics of supply and demand, what actually makes price move back up whenever it comes to a supply and demand level. Okay, so let's forge ahead now. On to get my support and resistance level, what I do is I switch it to a line chart. Now the line chart makes the price action very clean. Okay, with less noise, with whatever less of it. Okay, so I switch it to a line chart, and now what I'm actually interested in are the turning points. Okay, these are turning points. Here you can see when the market got here, it broke through this low, especially turning points that broke a structure. Okay, now this is the turning point that broke the structure. So what I'll do now is I'll come here, I'll highlight. I just want to take account of what is on my screen here. Okay, I just want to take account of what is on my screen here. And now this line chart works with the close. Okay, candle close. Okay, it works with the candle close and not candle open. Okay, it works with candle close and not candle open. So once the market closes, um the line chart takes record. Right, so now we are looking for what, um we are looking for change of price. Okay, where there's a change of direction or whatsoever. So now the market came here there was a change of direction for a period of time. So let's mark it up. It held here one, held here two, broke it, just did a little retouch, pushed up, came back here, retested it with a week. If I go back to line chart, you see by a week, came back here, broke it, retested it here, pushed up. Okay, now broke through it. So now the market has broken through it. So now let's forge ahead. It's held here, held here. Okay, the market held here also. Let's see, held here one, two. What we're actually looking for is multiple touches. Okay, if I switch back to the candlestick, then I'll modify it. Okay, but I just want to show you how I get my support and resistance line. Okay, that's why you can see something like this on my GBP USD. Okay, you can see something of such. Let this whole line come up. I think this stuff has cleared. I think I've mistakenly cleared this stuff. Okay, so let me see other charts. I think I've cleared most of these things by mistake. I've cleared most of them by mistake. So, but nevertheless, okay, that's how you see something like this. Okay, these are turning points in the market. Okay, most of them are my daily, some of them are 4 hours. Okay, some of them are 4 hours, then some of them are the 1 hour time frame, something like this. Okay, so NZD card. Okay, so switching back to my line charts, and now you can see what I drew previously there is holding here as what support and resistance. You see, held there, the market pushed down, broke it through, held there also, pushed down, came back here, touched it, pushed down, broke through, was within the line, came back here, retested it, came down. Here, retested it and pushed down. Here also with a wick, you can see if I switch it back to the candlestick, you can see the market came back here, closed and pushed up. Okay, after breaking through, you can see tested 1, 2 and pushed down. So now what I'm looking for are multiple touches. Okay, I'm looking for multiple touches. Now let's pick up this area here. This area as a support and resistance level. It's held here, pushed up. Now the market broke through it. Okay, but I may choose not to actually accept this, but let's still take it. Okay, because it's very important. If your stop loss was here, you would have been smashed out. Okay, so now this market may likely react to what the demand and supply level at this area here. So let's see if we have anything fishing here. So we have a demand, a supply zone around here. So you can see, despite the fact that the market is reacting to supply, to support and resistance, there is what a demand and supply zone. So if I have my trade for a sell somewhere around here, okay, my stop loss could be this next daily support. Okay, this is on a daily time frame here. I could either modify it on a lower time frame, and I might take profit like this. Okay, this would have been a winning trade. If I choose to have my take profit at the next level of uh, support and resistance, which is this level here. Okay, so you can choose to buy and sell within support and resistance levels. Okay, so I'll be explaining it to you and showing you guys how to make use of support and resistance levels in your day-to-day buying and selling decisions. So now let's switch back to the line chart. Here the market is a bit choppy, but despite the fact that it is choppy, it is respecting some level. So we have this level being respected. One, if I change this to, let me see, 1, 2, okay, this is part of it. 1 with a wick, 2, 3, 4. Here also multiple touches. Okay, so that's that. Then let's see for more areas. Yeah, we could use somewhere around here, this low here. We could choose to use this low. Why this market reacted here could be as a result of uh, supply and demand. Okay, despite the fact that it is reacting to a support and resistance level, but once there's a supply and demand level here, it makes price push even further. So that's it. Now let's see. Let's keep searching. Let's keep searching. We have this level here, held here. Okay, held here for a push. Now it's holding here for a drop. Okay, so we could still mark up areas here, but let's modify it on a lower time frame. I don't know if you understand what I just did there. If you don't understand, drop on the chat section. Okay, and I'll do a little recap for you. Okay, but basically what I'm actually looking for are turning points. Okay, areas where the market came into and changed direction. Here's a turning point, here's also a turning point, here's also a turning point. Market came up and touched this level and decided to drop. Here's a turning point. Basically a major support and resistance level which is causing this whole change of trend. Okay, so now we've gotten this on a daily time frame. These are the major support and resistance as a day trader here. These are the major support and resistance level. So up next, I could actually mark up this level here as a level. Previously it must have held, so let's go back in time and let's check out this level and let's see how it has held over time. Okay, this last red line here. Okay, see it held here, held here, held here, held here also. So now we may likely expect what price to push up like this. Okay, we may likely expect price to push, because from this point where the market is currently, it gave a change of trend. You can see the momentum that pushed up for a bullish trend. Okay, you can see it. The market pushed up for a bullish trend from this point. All right, let me switch to a candlestick. You can see the market pushed up for a bullish momentum from this point. All right, so I can mark up what. Let me use another area here and mark up the supply and demand level. So I can choose to mark up the supply and demand level here and decide to go long. Okay, I could choose to go long from this point. Okay, my stop loss could just likely be just below here, and my take profit level could be this level here of the next daily support. Not bad, a trade. All right, but if I go down to a lower time frame, I could modify it. Okay, Grace Nation, you are raising up your hand. Questions, drop it on the chat section. All right, drop it on the chat section. Okay, so uh that is that. So now what we need to do now, the next thing now you need to do is you go to the 4-hour time frame, still on the line charts. Yeah, still on the line charts. Now what you're actually looking for on the 4-hour time frame are turning points also on the 4-hour time frame where the market got to and changed direction. Okay, so now just to make it a bit simple and not confusing, change the color of your line. Now your daily line or daily zones could be the red line, then the 4 hours could be your blue line. Okay, so here turn push, here could likely hold the market for a push up. Okay, so NZD card, most likely I'm seeing a buy. Okay, I'm seeing a buy on NZD card, but let me watch out for this level here because I'm seeing structure being violated. Let me watch out for this uh demand level here. Okay, so what I'm expecting here now is this market should do something like this and rise. Okay, this is my expectation, but it could be different. Okay, it could be different, but still, nevertheless, I could just risk a little here, and once the trend is kicking in, I could still uh, add more trade based on dollar cost index. Okay, I could do my costing and keep on stacking more position is left for me. Right, I could just hold one position and let it ride to this very top. So um, that is that. So what I'm actually looking for are major turning points. Okay, major turning point on the 4-hour time frame. Right here also can serve. Right here also can serve. Okay. Where else? Where else? Where else? Where else? Mm, no, I'm not saying you should buy yet. Okay, the structure is not complete. Okay, what I'm actually looking for is just more like a little dip in. Okay, it could retest this level or retest this level. If it retest this level, not bad. If it retest this level, not bad. So once the market starts rising above this structure here, yeah, I could decide to buy. Okay, once it gets to this level here, if I could use my fib and get a good price at discount, then I could ride it. Okay, but what I'm trying to say is that the trend of um NZD card may likely change because it got to a structural point. Okay, I could check it up later on a weekly time frame if I feel like. Okay, so that's just it. So I'm looking at turning points. Let me see. Let me see. Because of this daily, I don't want to actually cloud it too much, but let me just drop one here. Okay, let me drop one here. But here is a bit clouded because of the daily and the 4 hour time frame. Okay, let me drop one here. Held here, held here. Okay, these are multiple touches. And let me just put one more here. Finally, somewhere around here. And let me put one here also because of this double bottom here. Held here, held here, held here, held here. Right, so that's it for the 4 hour time frame. Let me just drop one here. There is one here. Okay, held here, held here a bit, held here, held here. I broke it and pushed down. Alright, so now that's it for the 4 hour time frame. Now I'll next thing I'll do is to switch it back to my candlestick and go down to the 1 hour time frame. Now on the 1 hour time frame, what I'm actually interested in are the wicks within these boxes. Okay, within daily boxes or 4 hour boxes. Okay, so within these two boxes, what I'm actually looking for are the wicks rejection. Okay, so I could decide to mark up some wicks rejection. Let me see. This 4 hour here, I've taken over it. Okay, this could serve. Alright, so you could change it back to which color. Let me use black for this because that's the color code I use. Okay, this is weak rejection. You see at the week. Okay, so that you can get sniper entries. Okay, these are the ways you get good sniper entries, whereby you just get to enter the trade at the beginning of the whole drama. Okay, so what I'm actually looking out for are weak rejections. Okay, something like this. You see it held here and held here also. Okay, so if your stop loss is just slightly above this level here, let's say you entered for a sell from here and your stop loss is just slightly above this level here, just by 1 pip or 2 pip you are safe. Okay, this is the way we get good entries, right? If your stop loss is just above this level, by 2 pips or 1 pips you are safe, right? But if your stop loss is just somewhere around here, you get smashed out. Okay, you see it, there you are. You say, oh my god, the market is haunting me. Nobody is haunting you, my brother. You didn't do your analysis well. Please, what is the meaning of sniper entry and what is the advantage? Okay, sniper entries are those type of entries where you experience very little or no drawdown. Okay, drawdowns are cases whereby the market is going against you for a short period of time. Okay, let's say you see that this market is going to sell from this point. Okay, and you enter this market. I think I'm having network issues. Okay, and you enter this market from this point here. You are expecting this drop, quite alright, and you enter this market from this point. The market may go against you for a short period of time before giving you the real move. Okay, but if you were in this market from this point, you see this very point of this week, if you enter this market, this is this, in fact I call it the snippet entry, sniper entry. Okay, so you were in this market from this very point with no drawdown. Okay, you see that nothing occurred here, the market immediately you entered, you start seeing blue. Okay, that is sniper entry. Immediately you enter the market, you just start seeing blue, like you start running in profit. Okay, you were not having those period whereby the market is in drawdown or you're in losses before the market goes in your direction. So those period where you enter the market from the beginning of the move, okay, those are sniper entries. All right, so I hope I've been able to answer you, and let's forge ahead while we are looking for weak rejections. Okay, so what we're actually interested in are weak rejection. I could have used this but okay, let me still mark it up, but though it to be very very tight. Here is a very very tight zone from what I can see here. Okay, and we'll just wrap it up. Okay, we'll just wrap it up and then we'll call it a day. All right. If you have a question, go ahead and drop your questions, and then we'll attend to them, and we'll see you tomorrow. Okay, so this is it. All right, so this is it. Now, forging on to current time. Okay, forging on to current time. Now, let's say for instance, now we are expecting the market to come back to this order block here. Okay, ROT, return to order block. Okay, somewhere around here, this demand level here. Because what we can actually see is aggressive buying. Okay, so what I'm actually expecting is the market to return here. So if the market is returning here, and you have in mind that this is what is support and resistance level, now you can choose to have your entries like this, just few pips below the support and resistance level. Do you understand me? So I feel the market has done the return to order block here, so I will not be really expecting the market to do the same thing here. Okay, so what I should be looking out for is what? Weak rejections. So now you see this week, the market may likely visit here, here. The market may likely visit this week and push up. So what I should be looking out for is to most likely place my trade somewhere around here. Okay, and then my stop loss will be somewhere around here. So once the market visits this week, yeah, we test it and then start pushing up aggressively. Once the market touches this week, you see huge body candle like this. Okay, something like this. You can see the market touch this week, and then you can see huge bodied candle like this to the downside. So accepting, I'm expecting the same thing for this. So the market could likely touch this week, and then the next thing aggressively takes out this high. Okay, so that's just it. So um that's that for this particular trade. And where it's actually going to be very interesting is when this whole thing is resting on discounts. So this whole thing exactly is resting on the they call it the golden zone. Okay, the 0.50 and the 0.61. Okay, this is the golden zone. So once the market comes to this golden zone for a discount for a buy, then you see the markets playing out some magics to the upside. So um that's it. I hope I've been able to attend to the support and resistance, uh, and I've been able to explain this. These are contents people put out there and target price to it. In as much as I target price to mine also, because my mentorship class is for $250. Okay, online mentorship class. Then my physical mentorship class is about $400. So despite the fact I put a price tag to it, but I decide to give this training free of charge. Okay, I decide to give this training free of charge, uh, just to give back. Okay, just to give back. Okay, to the community, right? And to also help, even if I'm able to just get just one person uh, that can actually start his or her own life as a forex trader. Trust me, there is a special joy that comes with it whenever you see someone doing well. Okay, there's a special joy beyond complacency. There's a special joy that comes with seeing someone that you taught or someone that was under your mentorship doing well. Okay, um, it's really really a blessing to be in that kind of shoe. Okay, so uh, beyond every other thing, uh, uh, it's my earnest joy that you prosper. Okay, in as much as you're prospering, make sure you are prospering in every aspect, in your Christian life, in your spiritual life, in your studies. Even the Bible will tell you that the will of God, or the wish of God is that you prosper. Okay, that you may prosper and be in good health, even as your soul prospereth. So if you are prospering in one aspect of life, you need to have a balance. Okay, that's just the way it is. You need to prosper in basically all ramification of life. You prosper As a trader, you prosper in your family, you prosper in your finances, you prosper in every single thing. With your relationship with man and God, you prosper. Okay, so that is just it. So the only way you can prosper is by studying. You study the ways that have actually made men prosper. Okay, it's not rocket science. Okay, you study the ways that made men prosper and you walk in their footsteps. Okay, when you walk in their footsteps, you prosper also. Have a mentor that is prospering. All right, once you have someone that is doing great, that is doing good, it may not really show at the moment. Okay, once you see someone that is in the right track, you may not really see the person driving a Lamborghini, driving a Rolls Royce, living the forex trader life. Okay, those things are additions. Right, there are some people that choose to live a very low profile life, just a very comfortable life. It's their own way of life, right? But most of them prosper more than those that fancily live the lifestyle on the gram. Okay, so we just need to be very careful while choosing our mentors. Why? Because most of them may be deceiving. Forex may not really be what is giving them money. They may be scammers online. Okay, they may be scammers online, but they will be portraying it as forex trading. All right, they may be into YouTubing, okay, and they'll be portraying it as forex trading. They may have other businesses and portray it as forex trading. So we just need to be very careful and keep our eyes wide open. Okay, so uh, that is that. All right, that's that, and I'll see you guys tomorrow. So in tomorrow's section, I'll be talking about demand and supply. Then the next after which I will be talking about trend line. Okay, how to make use of trend line. Alright, so basically tomorrow we'll be brushing through this support and resistance. Then we will be diving into what demand and supply. So if you know you have a friend that is a trader and is not yet in this section, trust me, he or she is very, 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 very late already. Because if he or she is not in the next meeting, then I don't think there's any point he or she should join anymore because it gets more complicated by the day and gets more sweet by the second. Okay, so thank you guys for joining in today. Okay, do help to share the link. Okay, the turn up is most likely low compared to what we have on the platform. Okay, the turn up is very low compared to what we have on the platform. So uh do how to sensitize them. Okay, join, share the links to your friend. That is the only thing you can just do for me to make me feel happy also. Right, I'm giving out this content free of charge. The only thing you just need to do, just keep on sharing it. Let people get to know it. Okay. You may not really be the person that will benefit from it. Someone else you invited may be the may actually be the person that will benefit from this whole package. Maybe he or she may be struggling with trading, and you just invite the person and the person just gets to see a new different dimension of trading, and you get also to receive part of the praises and get to receive the joy also. So thank you guys for joining in today. If you have any question, do how to drop it on the Telegram channel. This video will be available on our YouTube channel tonight. Okay, so you can go back and watch the recordings. Okay, and also do well to engage with our YouTube content. Okay, like, share, okay, comment. Okay, so people can actually see what's going on in here. If the content are not good, put it out there. Say, please don't subscribe, the content is bad. Okay, I won't delete your comment, trust me. I won't delete your, because I'm trying to keep it as 100% as possible. I won't delete your comments. Rather, I may even pin it to the chat. Okay, so please try, comment, like, and share. Okay, I'm not asking for too much. Okay, just like and share. All right, so thank you guys, and I'll see you on our Telegram platform. If you have any question, please just drop it on the Telegram platform. I will attend to it there, and we go from there.